Kalpataru Projects is on our radar now. For Q2, the company's margins were impacted by the execution of the lower margin projects. Also, higher interest costs has impacted the bottom line. Amit Uplenchwar, who's the director at Kalpataru Projects, joins us now to talk about that. Amit, thanks a lot for joining in. You know, this margin contraction is something that perhaps is concerning the street as well. Can you tell us, you're sitting on a very big order book right now, almost 47,000 crores. As you execute that order book, will it come at the cost of lower margins? And what is the outlook for the second half of the year?
Hi, good morning. First, very happy Diwali, upcoming Diwali to you and all your viewers.
Thank you.
So to answer your question, from a margin perspective, this is still H1. We have always guided that we shall be in the range of 4.5% to 5% at a PBT level at the end of the year. And I think we've had mix of projects. Some started, later than planned. Some did not happen. And we've also had one project which we had planned in Australia, which we've exited now. So we've taken that project out of our L1 list as well. And that gave a little bit of a hit on our margin. But overall, if you see, we had guided at around 4.5%, 5%. And I think we will end the year at 4.5%, 5% at PBT levels for full year.
All right. Hi, Amit. Good morning and good to see you in. Earlier you were guiding for revenue growth of around 30%, in comparison to FY23 numbers. You're on course for that?
So, we are slightly revising that to 25% plus because, like I said, we had some projects that started late because of, reasons that were out of our control. And our Australia project, which we thought would contribute, to our revenues by way of supplies, etc. also. But having said that, overall 25% plus still for the end of the year is something that we are pretty confident we'll achieve unless something really goes off track.
Okay. I'll come back to the business in a bit, but lest we run out of time, I just wanted to check with you, a certain portion of your promoter holding, is it still pledged? If you can tell us how much is the promoter holding that's pledged at the moment? And is there a chance of more promoter blocks that could come into the market?
So, we had said that we would not increase as promoter holding any longer going forward beyond the levels that they already are. And I think if you see the trend, I think we are at 44% of promoter holding, which was well above 50% last year. So in that sense, the trend is to keep reducing the promoter pledge, and it's at comfortable levels. And we will only try and keep those levels going down rather than going up from this point on.
You have a targeted number?
So we don't have a targeted number, but for sure I can tell you that we do not wish to increase them going forward.
Okay, all right. Well, there were some IT raids as well. And these sort of things, they make shareholders uncomfortable. Is there an update out there? Have they asked for some information? You'll have furnished that. What's the update? Because, that will soothe the nerves of shareholders as well, based on your reply.
So IT, we are cooperating with the agencies and providing them information as they've been asking. And I think in routine course of business, we will continue to do so. And if there is anything that has any impact at all on numbers, etc., we will come back to you within the guidelines as soon as that happens. But I don't see that happening at the moment.
Okay, all right. You had a couple of projects, I think, that you were looking at divesting, right? Maybe bringing the balance sheet in better shape. Could you tell us what is the balance sheet looking like? And are there any assets that you're looking to offload?
So, looking at balance sheet, I think our balance sheet is the strongest that it has ever been. We are still at 104 days of working capital cycle for an infra company. I think that's pretty amazing. We are trying to bring it down to less than 100 days by the end of the year. So far as our non-core road asset, which we were having a non-binding offer, that we've not sort of gone ahead with that for the moment. We are still talking to several other parties. But on a heartening note, I think we've had for the last 5 quarters a 15% CAGR on our total revenues. This quarter as well, we've hit an average daily collection of over 58 lakhs per day, which has for the first time made our projects EBITDA positive. And hence there's no drain on the company any longer in terms of us funding these SPVs other than the debt servicing. But we are definitely looking at an appropriate time and a good offer, which is in the interest of all shareholders to exit. It still remains a non-core as we have defined earlier. and we will be focused on trying to, get it off our balance sheet sooner than later.
All right. Okay. Thanks a lot for joining in and, speaking to CNBC TV18.